Is access to capital holding your Amazon dreams hostage? Are you an ambitious seller, brimming with potential, but perpetually bumping up against the limits of your current cash flow? Perhaps you've heard whispers of Amazon funding and wondered if it's a mythical beast or a genuine opportunity to propel your business to new heights. Well, you're in the right place, because today we're not just defining Amazon funding. We're dissecting it, exploring its nuances, and showing you how it could be the rocket fuel your e-commerce enterprise desperately needs. For many Amazon sellers, the journey begins with a brilliant product idea, a meticulously crafted listing, and a surge of initial sales. But then, as success starts to bloom, a new challenge emerges. Growth requires capital. Inventory needs to be replenished in larger quantities. Marketing campaigns demand bigger budgets, and expansion into new product lines or markets necessitates significant investment. This is where the traditional funding landscape can feel like a labyrinth. Banks often require extensive credit histories, collateral, and lengthy application processes, all of which can be daunting and time-consuming for agile e-commerce businesses. Traditional loans might not always align with the fast-paced, often unpredictable nature of online retail. This pressing need for flexible, accessible capital tailored to the unique rhythms of the Amazon ecosystem, is precisely what Amazon funding aims to address. Let's start by delving into Amazon's own direct funding initiatives, with Amazon lending being the most prominent. Imagine Amazon, the very platform you sell on, offering you capital. It sounds almost too good to be true, but it's a reality for many eligible sellers. Amazon Lending is an invitation-only program where Amazon proactively extends offers for short-term business loans to select sellers. These offers are typically based on your historical sales performance, your seller rating, and the overall health of your Amazon account. The beauty of Amazon Lending lies in its simplicity and speed. If you receive an offer, the application process is streamlined, often requiring minimal documentation, and funds can be dispersed quickly, sometimes within days. The interest rates are generally competitive, and repayments are typically made directly from your Amazon disbursements, making it incredibly convenient. However, it's important to understand the nuances of Amazon Lending. Being invitation only means you can't simply apply. You have to wait for Amazon to extend an offer. The loan amount are also generally capped, and while they can be substantial for many sellers, they might not always meet the needs of larger, rapidly expanding enterprises. Furthermore, the short-term nature of these loans means a relatively quick repayment schedule, which, while beneficial for maintaining financial discipline, might not suit every business's long-term strategic goals. The primary use cases for Amazon Lending often involve inventory replenishment, covering seasonal dips in cash flow, or financing small to medium-sized marketing campaigns. Beyond Amazon's direct offerings, the landscape of Amazon funding is significantly broadened by a robust ecosystem of third-party lenders. These companies have recognized the immense potential within the Amazon seller community and have developed specialized financial products to cater to their unique needs. Unlike traditional banks, many of these lenders understand the intricacies of e-commerce, the seasonal fluctuations, the importance of inventory management, and the value of sales data over traditional credit metrics. They often leverage sophisticated algorithms that analyze your Amazon sales history, product velocity, customer reviews, and other key performance indicators to assess your creditworthiness and offer tailored funding solutions. One popular form of third-party Amazon funding is revenue-based financing. This model is particularly attractive because it aligns the repayment schedule directly with your sales performance. Instead of fixed monthly payments, you repay a percentage of your daily or weekly Amazon sales until the advance is fully repaid, plus a pre-agreed fee. This flexibility is a game changer for many sellers, especially those with fluctuating sales cycles. During peak seasons, you repay more quickly, and during slower periods, your repayments adjust accordingly, alleviating cash flow pressure. This model is ideal for businesses that experience seasonality or those looking for a funding solution that scales with their revenue. It's often used for large inventory purchases, expanding into new marketplaces, or launching significant marketing initiatives. Another common type of third-party funding is a merchant cash advance, MCA. While similar to revenue-based financing in its flexibility, an MCA provides an upfront lump sum in exchange for a percentage of your future sales. The The repayment structure is typically more rigid than pure revenue-based financing, often involving daily or weekly fixed payments that are deducted from your Amazon disbursements. However, the advantage of an MCA is often faster access to larger sums of capital compared to traditional loans, and the qualification criteria are typically more lenient, focusing heavily on your sales volume rather than your credit score. MCAs are often a good fit for sellers who need immediate capital for urgent needs, such as unforeseen supply chain disruptions, bulk purchase opportunities, or to cover unexpected operational expenses. The application process for third-party Amazon funding providers is generally more streamlined than traditional bank loans. Many lenders offer online applications that can be completed quickly, and they often integrate directly with your Amazon Seller Central account to pull necessary data, accelerating the underwriting process. This means you can often receive an offer and access funds much faster than through conventional channels, which is crucial in the fast-moving world of e-commerce. Furthermore, Amazon funding can help you avoid common pitfalls associated with rapid growth. Undercapitalization is a silent killer for many promising businesses. Running out of cash to replenish inventory when sales are booming or missing out on a bulk purchase discount due to insufficient funds can severely hamper your trajectory. Amazon funding provides the necessary liquidity to seize opportunities, manage cash flow effectively, and maintain a consistent supply chain, even during periods of accelerated growth. It allows you to invest in marketing, expand your product catalog, and explore new avenues without being constrained by your immediate cash reserves. In summary, Amazon funding is not just a trend. It's a vital component of the modern e-commerce landscape. It empowers Amazon sellers to overcome capital constraints, seize growth opportunities, and compete more effectively in a dynamic marketplace. Whether through Amazon's own lending programs or the diverse offerings from third-party specialists, the availability of tailored financial solutions is transforming the way Amazon businesses operate and scale. By understanding the different types of funding available, their advantages, and their ideal use cases, you can strategically leverage these resources to unlock your Amazon business's full potential. With that said, thanks for watching, and until next time.